One second, guys. Technical difficulties. Hmm. Sorry about that. We have had some technical difficulties. Okay. Make sure everyone's here. How many people have we got in here? All right, 29. Good enough. Hello, everybody. Welcome back. Happy New Year, 2024. All looking to change our lives and make some gains. So today's call, we're gonna go over a few things. Gonna do a lot in a short amount of time, but we'll get through as much as we can. One of the things I'm gonna cover is daily bias to some extent, as well as more revisions in terms of like the strategy, because I'm only every time I'm like looking to improve trading and the strategy and etc. I'm only looking to make it more mechanical, more simpler to get as much money out of the market with the least amount of effort. So I'm going to go over a few things that I've been like looking at in terms of like optimization and things like that as well. So let's start with just reviewing this week in price, top-down analysis style. So two pairs I trade, well, three pairs I trade, EU, GU, and gold, but I didn't look at gold much this week because it's CPI. So My main pair is EU, as you guys know. So let's look into the charts. So on a weekly, in the middle of a range. So inconclusive. So I'm not really trying to guess which direction, but I am going to show you how I address how I do think in terms of probabilities to be able to figure out what I want to do bias wise. Because that question, as much as it's been asked, I was thinking about it and I'm just like, well, realistically, there is no holy grail strategy. The way I've been doing it subconsciously is just I always think in probabilities, meaning I'm a supply and demand trader. So when I was trading supply and demand, I was never thinking about daily bias, etc. I was thinking about price getting to an area of interest and who's in control. And underlying that, depending on where I'm at my PO, where I am in terms of my POI and who's in control, I'll then figure out what I want to do, aligned with my framework of PTLR. So what does that mean? So meaning in times like this, especially when you're in a range, daily bias isn't going to be easy because it can go either way because you're in a range. However, the confluences that we do have, or that I use in particular, to be honest, is just the fact that I know when I do my top-down analysis, I know where I want to trade from. So, for example, say I have that as a CPV, and I have this as a break of structure. Now this becomes this last reaction, this sell to buy wick ends up being a point of demand because it's the last point of demand before the structure break. So this is why my PY I'm interested in. Now, I don't know when it's going to get here, but I do know when it does get here, this is demand. And what am I looking to do? I'll be looking to buy it. So with relation to daily bias, for me, the way I do it is I mark out my supply and demand zones as you normally would if you came from Phantom, you know what this is already. And then depending on the time, the day, and the consecutive candles, I figure out my daily bias. That's all I use. I did experiment with an SMA rule, but I don't really like it because it's too subjective. I like the fact that I trade supply and demand and I look at a statistical confluence to determine what's my odds. Because then I know with actual hard numbers is what am I doing stupid or not. And the reason why I like using consecutive candles in conjunction with uh supply and demand is for this reason. When you look at consecutive candles, you often see you don't often see more than four in a row. And when you do, it's usually heading towards something, i.e., demand or supply. So, with that being said, the only two things that are important to me are where are your demand and supply zones? Okay, if I had to break this down, I'd think about it in three ways. Where are my supply and demand zones? Because that's where I want to trade from. How many consecutive candles have I had in a row to know when I'm expecting to anticipate a pullback? And lastly, what is the range relative to the what is the daily range of the previous day relative to the previous daily candle. So I'm gonna break that down in the best way I can because this is a complicated topic, but I will try. So the reason why I use these three confluences, I'll break them down. So the first one is obvious. Supply and demand, that's where you want to trade from. The idea is if you've broken structure, this needs to get mitigated for you to continue. That self-explanatory. Everyone in here from Phantom or whatever community that knows supply and demand will understand that concept. The consecutive candles element is useful for this reason. Say we get to this weekly demand level, right? By the time you get to this weekly demand level, you've had one, two, three, four, five, six candles in a row. So by the time I get here, I have one confluence, which is I want to buy from here because this is demand. I have the second confluence, which is if I've had six bearish candles in a row, I've had six bearish candles in a row. What's the probability of number seven being bearish? 1%. So there's a 99% chance I can be bullish here. So in this instance, I'd be looking for a buy. Once that has happened, now the question is it going to be a buy or a sell? Who knows? And when you look at the odds, because after you've got that one bullish candle, where did I just put this? The odds of it from a purely statistical perspective end up being what? 50-50. So you looking for like this magic uh holy grail thing because you have this need to be right isn't gonna happen. There's no magic strategy. It's not how the market works. It's never gonna work, right? You have to accept that what the odds are, which and think in probability. So you know with that one bullish candle that's just happened, the odds are now 50-50. So with that being said, when you look at the chart, you're like, okay, let's break this down even further. When you look at the chart, the odds of that, for example, after this day, it was going to be 50-50, whether it's going to be bullish or bearish. But what do we know that's more important? Even though this candle was bullish, who's still in control? Supply. Because you still got supply holding. This is why I say the main things that I look at is supply and demand, followed by the statistics, which is why, like I said, when it all boils down to like my key principles of how I trade, who's in control, trade towards money, data doesn't lie. Who's in control, which is supply and demand, will dictate what you're looking at first. Data doesn't lie aspects and trade towards the money is is linked to the fact that one, you're going to sweep liquidity you're going to take liquidity first before we're going to go bullish, and two, there's still a draw on liquidity in terms of trade towards the money because you still got this imbalance. So with that being said, like I said, the way I trade, I follow my three pillars or whatever you want to call this. Supply and demand dictates this one. Draw on liquidity dictates and gives an additional confidence as to how valid the supply or demand zone is. Sorry, it's supposed to be demand. And then the last part is based on consecutive candles, I'll figure out what my bias is in terms of what my odds of my bias is to know, okay, for example, I've hit this daily demand zone at this point, for example. Let's move this out of the way so it's clearer. I hit a daily demand zone at this point. It came from a bullish candle, so now this resets, meaning this is now 50-50. So the next day, I know statistics wise, there's a 50-50 chance it can be bullish or bearish. But what do I have? I've got it coming from high time frame demand. So based on price action, the main thing I'm looking for is a buy. But I know this day is 50-50. So I don't have any like edge in am I going to be right or am I going to be wrong? The only confluence I have in addition to the fact it's 50-50 is I know I'm coming from a demand zone and I've still got supply holding. So what do? You mark out your supply zone and then you literally wait and you trade what you see. Meaning, if you're still breaking down this day in basic principles, which is okay, you start the day, you're waiting for Asia to finish. You mark the high, you mark the low. What time is this on? 7. You mark the high, you mark the low. Rule says what? Don't do shit until the expansion. Now you got your supply zone, you got your demand zone. Like so. What are you waiting for? PTLR. Do you see anything in terms of a setup here? Not really on the downside. Do you see a setup on the upside at this POI? Let's see. So what do you have? Your daily bias, like I said, you're going into the day knowing statistically 50-50. There's no real edge. All you have is you've got your previous New York, that's your supply zone, like this, and what you're waiting for, PTLR. Do you see it? Well, just at the edge, more or less at 10. I give myself a little bit of leeway, so that's fine. But I still can't take the trade until what? I get a confirmation. So I need to see what? A demand. I need to see my breaker, and I need to see that the demand chain has failed. So the valid trade for me on this day, even though the day I think ends up bullish, what I see based on what I have in front of me, knowing that the statistics say it could go either way. It could be 50-50 based on the consecutive candles. I'm at my supply zone. I've seen my entry confirmation. Like, depending on how you look at this, you could even say this is your breaker technically, if you look at it on the 5M. And then from there, you decide to enter once either this one fails, you could enter here, or when this one fails, if it gets to the 50, which it does, you enter there. Break even, TP. Exit window, you're out, 2R, finished. Your bias in this case, overall for the day, was bearish. The day closed bullish. Your daily bias was wrong, but what did you do? You played the daily range. So there will, like I said, when the days are 50-50 and you really, really don't know, all you have in your favor is based on what you know at the time, meaning when you have the vertical line like this. So up until this point, what do you know? You know, supply is in control. You'd make the argument that PTLR is relevant because you could see there's IRR potentially here that you could have targeted and you're expecting it to go further down than where it finished. But you know, one, Monday, you're not going to expect a big range. Two, like depending on whatever, well, it's December. So December, you're not expecting big ranges either. But three, you know you're in your exit window and you're at your TP target for the day, which is anywhere between 2 and 4. So you're content with that. And you just take your chunk out of the market and you come back the next day. Then if we play the following day, like I said, this day, the day before was bearish. This day, technically speaking, closed bullish. So the next day, what are the odds again? 50-50. But what are you gonna play? All you got to play is the fact that you know the next day the odds are gonna be 50-50 again because you just went from bearish to now bullish for the day. And all you got to play is the fact that you need to figure out who is in control once again, which is why it's the first thing you look at. Who's in control between supply and demand? Because right now, given the way the PA is looking, you could make the argument that you're in a range. How do I do this? Where's the... Before I move on, just want to make sure people are understanding what I'm saying. Say the other way around. Is that clear so far? I don't know if I've muted everyone. It would be good to get some feedback via the chat just to make sure. Because I don't want to go too fast and confuse people. So I hope I'm not echoing. Okay. Emmanuel says clear. Zaid says clear. Okay, cool. Okay. So let's fast forward. What? Oh, is this a holiday or something? No, it's Tuesday. Okay. So once again, same principle. So let's slow this down a little bit. The next day comes, I'm going to mark up my Asian range. And what have I seen now? I've seen supply fail. So I went into this day knowing the odds are still 50-50, but who's in control? Well, supplies failed here. So naturally, I'm inclined to think, okay, I want to go potentially long, right? Because in terms of who's in control, supply is in control. Sorry, demand is in control, supply has just failed. Now, the issue that I'm going to have is if that's the case and this has now become a CPV, I need to look at areas I can trade from. So one potential area is here. Another, and then in terms of the extreme of this chain, and then the other will be if I'm trading 15-minute order flow, do I have a liquidity POI that should be protected that I can trade? That's in one of the kill zones. That would be a high probable area to do what? To be potentially the Asia low of the day. But I'm not going to guess it because, like I said, it could go either way. So this whole Asia expansion thing is a defensive like mechanism for the strategy. Because when I was like, when I first started like looking into data and when I was trading and reviewing my own journal and stuff like that, I'm a very profitable trader in London. I'm a very profitable trader in New York. I absolutely suck in Asia session. Like, so for me, I really drilled down what is the common denominator behind, well, where are my losses coming from? And two, when I am looking at like the losses, why are they happening? And it's because I was trying to guess Asia. Now, uh, this is the reason why I came up with this, because not only do I know the probability of both sides being swept, but I also do know, what time is this now? 7. I also do know the probability. Not only do I know the probability of both sides being swept, but I also know the odds of where the low of the day is supposed to be based on the data as well. So what I try and do is I just let the data play out. So like, for example, am I satisfied that this could be the low of the day? I don't know. Let's see. So one aspect is what do we have? And this might not work out. Like, and that's fine. You have to always think in probabilities. So like I said, in regards to what do we know as of what we see right now? We know liquidity POI formed in the kill zone. We know it's part of some kind of chain that broke structure. So this could hold, but we also are aware that we've got imbalance here. And this is the extreme that from a perspective of data hasn't been mitigated. So there's two plays you could take. You can either try and take the retracement back to this now that this is expanded, assuming that this is the daily candle and it has a wick already, so you don't think it may need to reprint another one, and you take that play onwards, and then if this fails, you look for a confirmation entry here to maybe go long. Given the fact that what? Today, 50-50% chance that it could be bullish or bearish, but the only confluence you have is demand is in control, supply is not. There's nothing up here that needed to get mitigated. This was efficient on the way down. So the argument is because it was efficient on the way down, the intention to come up here isn't to mitigate anything, it's to liquidate it. So given what you know, you make a decision. Now, well, fucking great. Well, looks like it went off without us. Yeah. So in hindsight, either you'd have put a limit here, or you simply just missed the move. Who knows? But my point is, you're never gonna know with certainty. Like you're gonna most days when you have like one day bullish, one day bearish, you have to just go into the day knowing it's a 50-50 shot. Then the only other confluence you have is who's in control with the supply and demand, and you make a decision based on that. And then the last part before I forget, if you are looking in terms of like the day, another thing that is good to also mark on your chart, which is something I do also sometimes, is I mark out the previous day low and the previous day high. And the reason why I do that is because I know, for example, if I have a bullish bias and you're looking at the daily time frame just to show the logic. Where is these candles? What is going on here? Right. If you've got a bullish bias or bearish bias, just to show the logic, whenever you've got a bullish candle that engulfs the previous one, what does it technically have to do? It has to take the previous day's high. So if you already knew, for example, you had a bullish bias, in this case, it's irrelevant because you wouldn't trade before Asia. But let's say, for example, you did find an entry here, and if it already expanded from Asia and it hadn't hit the daily high, because you know the probability of this being hit when the candle is bullish is 70%. You already know that the previous day's high as a target, it has a 70% chance of being hit. So that also gives you a bit of an edge and confidence in terms of you thinking probabilistically in terms of, okay, when you get to the chart, what do you know? You try and figure out in terms of supply and demand who's in control. You look at the consecutive candles to know where the bias is likely to be based on a statistical number, meaning is it a 50-50 chance or do you have more of a chance? And so on. That's the broad summary of what I do in terms of daily bias. But I want to touch on a more advanced point because this point is really key in why I manage my trades the way I do and why I have that Monday, what's it called? That Monday, Tuesday partial rule. And it's for this reason. Let me just get an example of where this would have bit you in the ass if you didn't follow this rule. Yep, this one works. Okay, right. So here, what do we have? So this is a good example for daily bias, and I'll explain why. Okay, we have a typical bullish week, right? You've got Monday low, and you've got Friday high, right? Just like the data says. Now, in hindsight, it would be lovely to, sniper this and be like, okay, cool. Hold for the weekly range to the weekly target on Friday and get 7R, right? That's all fine and dandy, but that's not the way the world works, right? At the end of the day, we're all human, and psychologically, you're not going to be willing to go from 4R all the way back to 1R to go and get 7R. You're not going to sacrifice, because you don't know if it's going to go back up, right? Which is why I have that rule. When you've hit your R target, whether it's between 2 and 4R, whatever it is, partial and let the runner do damage. Now, why do I say that, and why is this daily bias thing important in terms of the way I've structured it, in terms of how I trade? Well, I have supply here, and it's inconclusive whether or not supply is in control or demand is in control, because you would have made the argument when this caused a reaction here. If demand was in control, it was part of this chain, why did this fail, right? So there's an argument to say that you're not sure. So going into this day, given that we had one bullish day, one bearish day, coming into Monday, it's 50-50 again, right? But what do you have? You got this mini chain here that fails there. So then same principle again. Let's put this on to 15-minute. Same principle again. Okay, you got your breaker and same rule applies. You don't do shit until what happens. Uh, da, 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 You need to wait for your Asian expansion before you do anything, because that's how you play defense and don't get involved in stupid shit. The low is in the kill zone. But let me just, where's the replay thing? Oh yeah, it's Monday, it's not going to show. Where's my indicators? What the hell? Oh, I'm being blind. Okay, right. Asia's in the kill zone. In terms of supply and demand, for the breaking structure, you had that liquidity POI. So that's your refined demand right there to justify why you're looking for a long from here. This has been mitigated. This broke structure. The last down candle before the break of structure. Here, like so. So either you take that down candle or you take this overall broad down candle, up to you. The principle is the last down candle needs to get mitigated, which it does. And then let's say you enter your first trade for the week, like so, on a low down continuation from the low of the day, right? So let's just use this as an example. So that's your Monday trade, right? Now, let's say you're looking to target 4R because we go for 2 to 4R because at the end of the day we're here to bank money. And if you partial this, whatever, that's not really what's important here. But the first day of being bullish is 50-50. Second day, the probability is still 50-50. So you go into the next day knowing 50-50 statistical chance of it going either way. But what do you know? Demand is in control, and the next point of supply that you'll be looking to maybe give you an issue is here. But this didn't like it's not a liquidity POI, it's nothing special. So this is probably a CPB, which it ended up being, right? So the real point of supply that you're looking for next is this one because it swept liquidity before breaking structure. So you're more interested in this up move. So until you get to there, you're looking to buy because did someone say something? Okay, right. Before you're looking to potentially look for a sell, you're looking to buy into it. So like I said, first day 50-50, second day statistically 50-50. So what do? The same thing again. You market Asia high, Asia range, don't do shit until what? You got your demand holding like so. Demand, break. That's a break. There's your last down move before the break. So you're playing the chain. You wait for your Asia expansion. There it is. That's not a liquidity POI, so you place it from the bottom, enter on the 50. Let me make this bigger. I think this is too small. All right. Either you take it as an LOD reversal, cover the low of the day, or put it here. That's up to you based on your back testing. For the sake of the fact that it's only 2 pips, I'll cover the low of the day. And you're entered again, right? And you're trying to get what? Well, potentially you're trying to get your minimum, you're trying to get your daily target. So like I said, 2 to 4R, 5R a stretch, as you know, based on the profitability table that we have. And you're looking to exit where? Optimal exit time, there it is, right? So let's just say for argument's sake, you partialed heavily here and here because you're not unsure who's in control. Because from a chalk perspective, the swing low that caused this high has been broken. So you don't know what is a strong high or what is a strong low. Nobody fucking knows. So you partial these two trades, I mean, they're almost 10R. And let's say you partial, I don't know, 80%. So you got 8R in the bag, right? Next day comes and is day number 3 bullish. Day number 3 bullish. The odds of day number 3 being, sorry, day number 3 bullish. The odds of the third day being bullish are now 22%. And the odds of it being bearish is 77%. So now going into the next day, what do you know? You're at supply, check. And what else do you know? you being at supply that's mitigated this specific POI that had an imbalance before it has been mitigated at this point, and you know there's a 77% chance this day is going to be bearish. So with that being said, you know through the statistics alone that it makes more sense to sell because now it's not 50-50. The odds are skewed towards shorts and you're at a supply zone. So those two confluences are enough for you to make an informed, data-driven decision as to what your bias is. So you do the same thing again. Asia range, don't do shit until it expands because you don't want to guess. This is the 7 o'clock candle. So is it this one? Let me just make sure. Where am I? Right. Okay. That's 7, 10, 7. Okay, right. And then Asia high is here. Now, before we start breaking all this structure here, 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 and here, this is liquidity POI. This is also a liquidity POI. And this is fallen in the bucket from our data bucket of being what? The highest probable time that we're going to see. Oh shit. See the high of the day. 1 second, my computer is just frozen. Oh, what's going on? Give me 1 second, the data is loading. Right, let's move this to over here. Okay. Give it a second. Oh, data problems. Technical difficulties. Computer doesn't like it. Okay, right. Why is that done now? Okay, right. So we know when bearish in our kill zone, midnight is the highest probable hour. So data-wise, this is at a high probable hour. We're at a supply zone, and we've seen a distribution over here. So there is a reason. We have multiple reasons to know to expect bearish price action. Then on top of that, what else do we know? We know that from a statistical perspective, with two bullish candles in a row, the odds of us getting a pullback is 77%. This is why when it comes to trying to approach the weekly cycle and trying to get the weekly move, I partial on Monday and Tuesday because I know the odds of me getting a perfect week of 4 bullish days in a row or 5 bullish days in a row are very low, right? Like there's only a 4% chance that I'm going to get the perfect week where I just scale in, scale in, scale in, scale in to get to my magic Friday 20 or 10 or whatever it is target, right? So I'm being realistic. So because I know this, the odds, the more common odds in terms of like the statistics account for a pullback midweek. This is the reason why I partial on Monday and Tuesday, because then I want to know that one, I've secured this move, and if with the profits I've secured from this move, now I get a free shot at scaling in later. But I also can take the counter trend play if all of my confluences align, which are price action confluences. Who is in control? Supply is in control as of right now. I get my expansion. So whether you know have bulls and you trade it on the basis of okay, when you're looking at the PA by itself, what do you see? If you don't want to wait for Asia, what do you see? You see this demand fail. If you wanted to extend the chain further, you could argue that there's reactions here and this demand has already failed. Up to you. But either way, by the time you get to this point, if this is a reaction to this has definitely failed at this point right here because you're formed equal lows. So what does that mean? You got liquidity to target. So now you should, switch your mindset to, okay, liquidity zone is here. Your supply chain is like so. This swept something before breaking. It left it before breaking this and this and this. Gave you liquidity to target for you to do what? Trade towards the money. And statistically, this is the highest probable hour that you're going to see the high of the day. So you have all the confidences there in front of you. So then enter like this, or wait for the candle to close, come back down, have minimal drawdown. There's a video on this I shared called The Right Side of the V. That's the reason why I enter like this. And then you start looking for targets, continuation. So break even, TP1, TP2, you're already at 3R. And you're at a demand zone that you may consider looking to long from for the rest of the week if your week is bullish bias. So with that being said, you're already done and take your money and go. It's a counter trend trade. You've got 3R, just take it and go. Anywhere from 2 to 4R per day is enough. A lot of us get greedy. And when we're backtesting and journaling, we get greedy because we're always trying to look at, okay, how I should TP. Like a lot of people, when they backtest, they'll be like, okay, I'll TP and I want to get out exactly here to the pip. Like that's not realistic. That's greed, right? Your end of the day, 2 to 4R is enough. So if you were to take this and you just follow your rules, which are, let's say you needed this to break, this to be a breaker. This is a little tangent, but it's an important point I wanted to make sure I don't forget because it was something that came in my mind this week. So let's say you needed this to break for you to be confident to go long, right? You needed this breaker. And you entered the long with a buy stop like this, straight into profit, no drawdown, whatever. All you're looking to get is 2 to 4R. With a 20 pip stop loss, realistically, you're not going to get 3R. So you're probably going to go for 2. The question now becomes, when do you hit 2R? Because pip availability wise, you know that you're not going to be going for more than 2. Because it's a 20 pip stop from what I can see, right? 19.2, all right, whatever. The reason why I'm drilling this point in particular in is because you don't want to feed into greed. And when you backtest, you lose sight of that, which is why I like having this mechanical system of 2 to 4R. Even though 5Rs will happen, but statistically they don't happen often. And at the end of the day, I don't care about the outliers or the anomalies. I want something that I come into the market every day and I know I can get my 2 to 4R. Depending on my stop loss size and my entry method, I know I can get 2 to 4R. Guaranteed. Because that's what protects your equity curve. That's what makes it consistent. That's what makes it repeatable. Whether you're in choppy market conditions or not, it's easier. Because we don't know when the markets are going to be choppy or not. We don't know when we're going to be in ranges until we're in a range, right? But you do know the average daily range of a daily candle. You do know where the extreme is likely to be, and you do know where the other extreme is likely to be from the exit, meaning you know where the high and the low is likely to be based on time and price, right? Like even in this example now, like where was the low? London kills it. Where was the high? In the exit window. Like you know all these things already. So it's just a question of like, okay, how big is my stop loss going to be? And given the fact I know the ranges, what's the probability of me getting 2, 3, 4, 5R? Ignore 5, 2 to 4R, right? 70% chance I can get to 2R with a 19.2 pip stop. Cool. So 2R is the target. End of story. Don't even look at this. When does it hit it? You're expecting it to hit in your exit window. Oh, well, Santa came early. You got it. You got your TP here. Get out. Done. Finished. Sure, it might get to 3R, but what are the odds of it, right? Like we can't, like, look, okay, let's say for argument's sake, it got to 3R, barely, right? And that's with spread. You don't even know if that would even count, but that's besides the point. You shouldn't be trying to optimize based on outliers, because if you try and do that, you're going to end up missing the mark a lot of the time. So you want to be optimizing based on the majority. Because if you're optimizing based on the majority, when you're trading day in, day out, you're going to get the result you expect, which is why I'm saying this. But to my previous point, like I said, use supply and demand to dictate who's in control. Use the statistics as a confluence for you to know exactly what your odds are for your bias. So today, there was a 75% chance we're going to be bearish. If you took the continuation, you got to 3R. If you took HOD, you still got to 2R. Good enough. If you're really, really, really like anal about it and you're like, no, I really, really want to wait for my exit window, well, you wouldn't have been stopped out and you still could have got the same amount of money again. So you would have given back all this profit for nothing, which is why I'm saying if you get your 2 to 4R, just take it. If you see another entry in the New York session, then fine, take it again. At least you know you banked money. Like the aim of the game isn't to flex on Instagram with a chart and be like, look, I hit 200R or whatever. No one gives a shit. The aim of the game is to bank money so you don't have to go sit at a 9 to 5 you hate. So focus on that. Uh okay. That's pretty much all I wanted to say for daily bias. Because that's pretty much what I do anyway. That's as mechanical as I make it. I don't believe there's a magic source where I think that is pretty mechanical, given the fact that I don't know any other strategy in the world that can tell you with a percentage, like probability number, what your chances are on each given day based on you reading price action. So that's how I use price action and data together to help me figure out what I want to do. I hope, does that make sense? Let's see what the chat says. There was also another video that I shared in the useful videos chat that was very useful, which was they addressed why 95% of traders fail. And it's, if you think about it, it logically makes sense where they're saying 90, anybody can go and search baby pips or basic stuff like Fibonacci and all this other stuff and all these other things. But it's the fact that they're using it in a generic way that they don't go into the depths of like, okay, what is your actual edge? Luckily for you guys, not to toot my own horn, but with this strategy, you actually have a unique edge. Like you're not looking for double tops or kangaroo tails or head and shoulders or whatever else kind of like chart pattern that there is, right? Because everyone's seeing the same thing and they end up being like liquidity. Whereas what we're looking for is we're looking for the manipulation. Because one thing we can guarantee in the Forex market is it's definitely manipulated. So part of the edge is to figure out where the manipulation is. Because once the manipulation happens, they're not going to re-manipulate themselves. Like once they've shown their hand, the idea is as a smart money trader, you're trying to figure out how to trade the manipulation in your favor to be in line with order flow. So that's part of the edge number one, which is the key, the first question, who is in control? Then we know guaranteed price is drawn towards liquidity. Hence why the second part of the pillar, trade towards the money. Then the last part, which gives us the edge amongst against other traders and is in line with all the algos and etc., is we're using the data and analyzing what price actually does. So we're actually analyzing what the algo does. Therefore, we're trading like an algo because we're trading in line with the algo, meaning any given day and any given week, a weekly candle is going to have a low and a high, a open and a close. We know through statistics and the data where this is, most likely. 75% accuracy, we know it's going to be on a Monday or Tuesday. We know with 75% accuracy, it's going to be on a Thursday and a Friday. We also know the time of day in terms of which session this is likely to be for the daily candles that make up the week. And we also know, based on supply and demand, where we're likely to see reactions from. And we also know when we're likely to get pullbacks based on the consecutive candle analysis. So all of these things combined, and me teaching you how to use it in a data-driven way and thinking in terms of probabilities all the time, gives you an edge. That is the edge. And that's what will set you apart from the 95% of traders that lose. Because you're always playing the edge. You know when to get in. You know where your stop loss is safe based on the fact that if you've got a bearish day, oh crap. Where was I? Okay, let's just go over here. If you've got a bearish day, like so, you know this can only get printed once. Once you've identified the high of the day, you know you can put your stop loss here safely, knowing that your bias 75% of the chance is going to be bearish this day. You know you covered the daily high, and you know the low is going to be when? In your exit window, most likely. So you know every time you're looking to trade on the charts, you're not doing something stupid because the data is in your favor. Because you're only taking trades and executing and managing them based on numbers. You're not doing it based on feeling. Because, key word here, or key phrase, the market doesn't give a shit how you feel. Tough shit. So it's based on fact. Fact is the low of the day or the high of the day, whether bullish or bearish, will appear in the exit window and this exit window between, let's say, 4 and 8, will appear in this exit window 84% of the time and 86% of the time. That is in your favor as a statistic. Hence why, the data says it will happen in this exit window 84% of the time. Every time you look at the chart, you'll always see bearish day, exit window, bullish day. Okay, one time it didn't work. Fine, cool, no worries. Bullish day, exit window. Bullish day, exit window. Bearish day, exit window. Bullish day, exit window. Bullish day, exit window. Like, the data doesn't lie. 86% of the time, it's going to appear in that exit window. And the reason why I like that optimal exit time thing also is because it gives me peace of mind. Because the reason why I looked into that statistic in the first place was I was getting very impatient trying to get to TP. So I needed a way to figure out, okay, realistically, how long is this shit going to take? Because I haven't got all day. And what I found was by me knowing, okay, I set my trade, and let's say, with a 18 pip stop loss on EU, I'm looking to target 2R or whatever, or maybe 3, whatever, right? Because at the end of the day, all of this is IRL, so maybe I was going for a bigger target, whatever. But my point is this. If I'm, let's say, going for 3R, I know I'm not expecting it to even hit 3R until I get to where? My optimal exit window. So I'm patient, I'm chilling. Like, I set my trade and I go do something else because I know realistically I'm either going to get to break even or TP around 3. So I just sit and just do something else and let the trade just play out, because there's no point me chart watching knowing that if I've entered at 7, that I'm going to have to wait until like 3 until getting to TP. Why would I wait Why would I wait 8 hours to get to TP? It's a waste of my time, right? So the optimal exit window stuff is very, very good for your psychology as well. But yeah, that's the main aspects I wanted to cover in terms of daily bias and using the data to help you. Does anyone have any questions in the chat? And was that explanation okay for everyone? So people are people happy with daily bias now? I hope people watch the recorded call and I upload it so they don't ask that question again. Because I don't have any other way of explaining it other than the way I explained it today, to be honest. Right. Okay. Uh, Let me see if there's need to get onto the questions. Dreamliner, you sure you're happy? I know you're hard to please, man. Like, you sure you're really happy, or is there any questions? Like I said, okay, okay. If Dreamliner is happy, that means it was a banger. He's hard to please. JK, you know you're my bro. I'm only messing with you. Okay, right. Let's see. Let me look at the questions to make sure that everyone in the community is happy that couldn't attend. So let me see if there's quick ones I could address that haven't already been addressed. Fear, if you do that, I'm gonna block you. Okay, right. In fact, I'm gonna mute the keyword daily bias from the chat so I don't even see it after this call. Uh, let's see these questions. Okay, these are too specific. Uh, what about weekly bias? Aha, I knew you were gonna say that. I beat you to it. That's why this exists, and it's the same principle. Ha ha ha. Nice try. So same principle, but use the consecutive weeks, and it's the same thing. Literally the same thing. So remember, supply and demand, burst, then using the consecutive candles as an initial confluence, and then you make a decision based on that. If it's 50-50, supply and demand takes more precedence. If it's more than 50-50 and it's skewed towards one direction and you got supply and demand, then you got a slam dunk trade. And then if you're in the week and let's say it's a bullish week, but you've had 3 consecutive days in a row and you've hit like a place where you're expecting a pullback because you hit a catalyst for a pullback and the odds are not in your favor, then either take the counter trend trade or don't trade at all. And only take the counter trend trade if it sets up. If it doesn't set up, don't do anything. Not trading is still trading. Like I said, the key to profitability is you need to know how to play defense and offense. Or if you're a sport guy like myself, you know, they say offense wins games, defense wins championships. And it's the championships that are ultimately what's important. So, take that words of wisdom. I don't have there's nothing generic that would help the community here. These are very specific questions. So I'm gonna just address them in the chat. So we're that's an hour. So I'm gonna leave with some motivational spiel, but I think it is relevant considering that we're just about to go into 2024. So bear with me, which is this. at the end of the day, we're in a new year and you have to, a lot of you are here to learn how to trade. Some people are profitable already, some people are not profitable, and that's okay. Like it's you versus you. The point is you're here, you're showing up, and you're learning something that you know has proven edge, which, as we all know, in order to make money in the markets is like the key thing you need. And you just have to have faith that you have a strategy that actually does it. Whereas with this strategy, you know it does because it's based on numbers. Now, one of the things that I want to like hit home here is I've seen a lot of people get discouraged because of things that have happened in their past, which is like I've been trading X amount of years, I've not hit profitability, I don't know if this is for me, etc., etc. Like you have to look at every single trade and every single trading day in isolation. 3 years, 5 years, 6 years, 10 years in the past doesn't dictate today. So you have to cleanse your mindset of being hung on to negativity from the past because it's only going to stop you from pursuing your future. Meaning, I get to the chart today, right? And yeah, okay, this week, boo-boo price action. This was bullshit. But I'm not when I enter to the charts and look for a trade today or yesterday or whatever, I'm not thinking about the trade I got I got a loss on from 2020, right? Like it doesn't make sense to hold on to baggage and not open your mind up to what is in front of you and taking it one trade at a time. So my point is leave the past in the past, focus on positive thoughts and positivity for a bright future, knowing that you're doing what needs to be done to achieve your why. And the why is different for everyone, but at the end of the day, what's the alternative? Working a 9 to 5 for 40 years to pay off a mortgage and die, or learn a skill that you can leverage that allows you to earn as much as you want to earn, not capped based on how much work you're willing to put in and ultimately holding yourself accountable. It's you versus you, and you decide the life you want to live. Trading is just an avenue to give you a potential option to have more time freedom. It's up to you whether you're going to put in the work to take it or not. So I believe everyone in here can do it because, like I said, the reason why we onboarded the way we did, which is everyone had to come with a coaching call, is I only wanted serious people, and we all can see from the way this community is run and how collaborative it is and how the caliber of student or mentee is. Everyone is on it, everyone is hardworking, and that energy and that knowledge exchange of like-minded individuals is what propels the community, is what makes it a good learning environment, which is what ultimately will achieve, I'm hoping, great success in the future, given the fact that everyone is serious. People aren't here just to waffle or mess around. People are here to change their families' lives and create generational wealth. And I just want to help everyone get to achieve their why. So yeah, ultimately, just remember you can do it. You are gonna have naysayers. You're gonna have people that don't understand, why you're doing it. They don't understand you, and that's okay. They don't need to understand you, and you don't need to please anybody. You don't need to live someone else's life. Live your own life. That's what I wanted to say. So have a good week. Be careful tomorrow because actually before I go, I should probably address what I think potentially could happen tomorrow as a mini outlook. So CPB here, this broke structure. So what I'm looking for is the following. I've got buy side liquidity here, sell side liquidity here. I've got a CPB and a reaction to oh shit. That broke structure. Like so. There's an argument to say this, considering there's an imbalance here, this particular candle hasn't been mitigated. Oh, let's move this up a little bit. What time frame is this? 1 hour. If you group these candles together, this is a 4-hour POI. So right now, Tuesday is the low. Even though the data came out for bearish price action, it's still inconclusive because of the overall fundamental sentiment, which if I do a mini video, I'll go over in more detail because it's too, I don't think there's enough time. Maybe, okay, let's just go with the overall. Let me do the technicals first, and I'll speak about the fundamentals. So I'm looking for potentially, this is a POI to trade from. So ideally, looking at this, if that does happen, this will be a perfect bullish cycle, which was Tuesday was the high, Thursday, Friday was Tuesday was the low, Thursday, Friday was the high. Now, when we're looking at the weekly candle, that would translate, if we got to here, that would be a full wick. So depending on what time we get here, either if Asia does a madness, so let's mark out Asia. So let's say Asia session starts and Asia range is about 20 pips. Let's mark this down. 20 pips. Let's do this. Make this professional. 20 pip Asian range. Right. Okay, so let's say Asia messes around and does some crazy shit where it's like this. Then if Asia expands, let's make this a bit bigger. So Asia expands and then forms something like this within 1 to 2 standard deviations to form the high. Given the fact that we know, okay, I'm gonna have to really be a chart Picasso here. But let's draw it on Zoom. Where is the Zoom button? Right, it's easier for me. What's the color? It's blue. Right, white. The weekly, when we get to here, right here, the weekly candle currently looks like this. By the time we get to here, the weekly candle, let me draw it in blue. The weekly candle will look like this. And this will be full, meaning no top wick. So if we get this confirmation like this, then we're expecting it to form the top wick and the weekly to close something like this. And then either that will mean, actually, no, hold on. Weekly could close something even like this. So if it opens here, that'll make that there, and then we can have this, and this would be a bearish candle for the week. Or actually, no, better option. Hold on. Weekly open is here. So let's mark that out here. Weekly open is here. We can still technically have a bullish week, but today, this day could be a bearish move. If we get an entry here, like so, and form Friday's high and the weekly wick, depending on what time this happens. This has to happen during London. London or Asia. Given the fact that Asian range is usually around 20 pips, I doubt it's going to happen in Asia. So it's probably going to happen in London. If we get to London and see a change in character at this POI, then the weekly candle could end up looking like this. Okay, there it goes, working now. So wick like this, body, something like this is what I'm trying to say. And if we close somewhere around here, there's enough range for you to get a 2 to 4 hour trade. Because right now we've had what, bullish, bearish, so it's still basically 50-50. So if anything, we've had 2 bullish days, one bullish, depending on where this closes. If this closes up, then this is 2 days bullish. But like I said, it's basically 50-50. My point is, if we are expecting the weekly wick to form on the Friday, which we are, then we could get a TGIF set up where we look for a trade like that and we play it 2 to 4 to finish somewhere in the weekly open, or potentially take out all of this liquidity and play around in this liquidity zone over here. But the likelihood of this finishing below here is low because you're not going to see, because if it finishes below here, that would make the week bearish. And that would make the weekly high on a, that would make us have a bearish week with a weekly high being on a Friday, which is statistically not likely. That's why I think we'll close above here. And given that the fact that ATR is here, as long as we close above here, that's still 3R. And the reason why I say it's unlikely for us to close below this, not impossible, but it's unlikely, is because let's look at the odds. Even though we've got PPI tomorrow, where is this weekly thing? When you look at the odds, what's the probability of a, shit. What's the probability of a bearish week with Friday being the weekly high? Over the last 16 years, 3.8%. That's why I don't believe it'll close below this. Right, because that would form a bearish weekly candle with a Friday high, which has only got a 3.8% chance of happening. So if Friday itself is bearish, it could finish here. But either way, we've been consolidating all week between this range. So it could go either way. So you don't have to force anything. Given the fact that this is not ideal conditions, you could just skip it, to be honest. I think I probably will do that because after today, I'm kind of fed up with this price action. So I'm just going to go do something more productive with my time. But that would be what I'd be looking for in short. And that is my data-driven reasons as to why I'd be looking for that. So I hope that makes sense. And I'd be looking for a similar thing on GU, but GU, I'm looking for this POI. I'm looking for this to get run. And I am looking for, we've had 1 bullish day, 2 bullish days. So what's the probability of 3 bullish days on GU? Let's have a quick look. GU, 3 bullish days. So there's a 75% chance tomorrow is going to be bearish. Alongside it's Friday. Alongside we need the weekly wick. So if Asia, like I said again, if we expect a 30 pip range, so let's just do it. Asia range. Let's say for argument's sake, Asia range is the same as this day and this day. They've all been 30 pips for like the last however many days. So let's just assume this is Asian's range. This is the POI. This is the extreme. This is the last up candle. If we did our standard deviation stuff, we're expecting a trade like this. Asia expands to the upside, comes back down. And the weekly open is here. So we'll be expecting the day to finish somewhere above here for a bullish week, but the weekly candle will have a top wick. Weekly open. So you'd either take the confirmation entry once that breaks and enter like this, or you take a adapted version of lunch money where you enter with a sell stop on the way down and cover this high. Or New York gives you a pullback and then you enter like this. As you know, those are your three options. So you just wait and see what happens. But this is the POI we're looking for, something either the last up move, which is the whole move up, so somewhere in here, and Asia will be the high, and then it'll come back down. So you'd have to wait for the expansion. If Asia's the high, and this one's in kill zone, and then it comes down, then you can expect to see this just down here. So it's just a question of like, okay, that's the plan. Does it conform to the plan? Yes or no? If it doesn't, adapt. If you see price action that is in line with this failing, then fine. But given the fact that the news was in line with a bullish dollar because inflation is not cooling as fast as it should, they don't have a reason to cut the interest rate. So in case anyone doesn't know, the whole reason why you increase interest rates is in order to cool inflation, because the idea is if you increase the interest rates, the cost of borrowing goes up, so people can't spend as much. If people can't spend as much, prices will naturally come down. Inflation happens where things become very expensive, people still have money to buy it, and then it kind of exacerbates the problem to the point where the people who are selling the items will now increase the prices because they know people can afford it. But if you increase interest rates and make it difficult for people to borrow money so they can spend less, then inflation has to come down. That's the gist of it. So today, CPI came out, and CPI came out higher than expected, meaning that they are trying to get to a 2% target, meaning the Fed. They are trying to get like a soft landing and ease into it. They were expecting 3.2 and ideally lower than that 3.1 to show that they're on track so they don't need to have interest rates as high as they did. Ended up being higher than that. Therefore, they can't cut rates as faster than anticipated because they're not on track. So what does that mean for currency? When you have when you have interest rates go up in a currency, i.e. the US dollar, then it means that there is demand for the dollar. Why? Because if you're looking at it from an investment perspective, if interest rates for the dollar go up, you who has, let's say, savings in dollars are going to get more of a return on your investment because they're paying you more interest for you holding dollars. And then vice versa. If they cut interest rates, then the demand for the dollar will go down. Yeah, foreign investors as well. Like that's what you need to see. A foreign investor is basically just putting their money into a savings account in dollars because uh they're getting interest on their money. So with context to this, the reason why price shut down like hell was because the interest rates, the CPI was higher than expected. So the Fed, the stance on the sentiment from the Fed was that uh, they don't need to reduce the interest rate as quickly, meaning they can keep it higher for longer, which means a bullish dollar. So that's why immediately this happened. But the sentiment overall is mixed because people don't know, is that idea already priced in, which is why we're still ranging and in this indecision. So I'm thinking that we're going to get more of a clue of what's going on after PPI. But that was the reason why that reaction was just a sharp move to the upside, in case anybody was wondering. I hope that explanation didn't confuse you, but that's the gist of the fundamentals that went on today. Just want to make sure everyone's cool with that before I sign off. Okay, right. Cool. All right, guys. It's been a pleasure, and we'll catch you tomorrow. Thanks for turning up, everyone. I do appreciate it. I'll upload the call some point tomorrow morning. All right, guys. Peace.